All right, let's talk about the world of mining. It's a tough business, right? Companies live and die by the crazy swings in metal prices. But today we're looking at a company called DPM Metals, and they're doing something really interesting. They're basically building a financial fortress to not just get through the storm, but actually come out stronger on the other side. So yeah, let's dig in.
You know, here's a question that keeps every CEO up at night. What do you do when your number one moneymaker, your cash cow, starts to run out of steam? For most companies, that's a 5-alarm fire. But for DPM Metals, well, they saw it as a chance to build a bridge to an even better future.
So to really get why DPM's strategy is so impressive, you first have to understand just how brutal the mining industry can be. It's this never-ending cycle of boom and bust. Prices shoot to the moon and then they come crashing back down. The companies that make it, they're not just the ones who are good at digging stuff out of the ground, they're the ones who are incredibly smart with their money when things inevitably get tough.
And that's really what this cycle is all about. When metal prices are high, that's the boom. Everybody's making a ton of money. But when they fall, that's the bust. The truly successful companies, the ones that last, are the ones that use those good times to get ready for the bad. And as we're about to see, DPM Metals has basically made this their entire philosophy.
Okay, so what was the specific problem DPM was facing? Well, it all came down to this one mine, their Čoka mine in Bulgaria. It was an absolute cash machine, super high margin, but it had an expiration date. The clock was officially and very loudly ticking on their biggest source of income.
And you know, the market analysts were pretty blunt about it. For a company without a solid plan B, losing your main cash source, well, one analyst literally called it a death sentence. It's the kind of thing that can put a company out of business.
I mean, just look at the timeline. Čoka was a massive success story. It went from just starting up to being this huge cash generator. But here's the thing about mines. They don't last forever. DPM could see this giant revenue cliff coming right at them. And the big question for everyone was, what are they going to do about it?
And their answer is what we're calling the cash flow bridge. See, instead of panicking, they came up with this really smart 3-part strategy. The whole idea was to use the money they were making now to build a bridge over to a very, very promising future.
So here's that 3-part blueprint. It's so clear. First, you extend the old. They work to get a lot more life out of another one of their existing mines, Chelopech. Second, you ramp up the new. They got a new project, Varish, and are bringing it up to full speed to get that new cash flowing. And third, you target the future. They're fast-tracking a huge potential game-changer of a project called Čoka Rakita. Extend, ramp up, and target. Simple, but wow, is it effective.
This table just lays it out perfectly. You've got Chelopech, which is now the stable, long-term cash foundation. Then there's Varish, which is already starting to kick in over 100,000 gold equivalent ounces a year, which is just a way to measure the total value of all the metals they dig up. And then you have the big one, Čoka Rakita, which could eventually produce almost double that. Every single part of this bridge is crucial.
Look, having a great strategy on paper is one thing, but what really matters is whether you can pull it off. And the results from DPM's plan have turned the company into what people are now calling a financial fortress. Honestly, the numbers here are just incredible.
First up, let's talk cash. They're on track to generate over $500 million in free cash flow next year. And let's be super clear about what that means. That's not revenue, that's the cash they have left after paying for absolutely everything. Running their mines, investing in new projects, all of it. It's pure financial firepower.
Okay, next number. Debt. How much do they owe? The answer is zero. Nothing. Zilch. A completely clean balance sheet. At a time when so many of their competitors are loaded up with debt, DPM owes nobody anything. That gives them so much freedom and a huge safety net.
So what do you get when you have all that cash coming in and zero debt going out? You build yourself a war chest. DPM is sitting on almost $500 million in cash. And what that means is they can pay for all their future projects themselves. They don't need to ask the banks for a dime. They control their own destiny.
And they're not just sitting on that pile of money like a dragon. No, they're giving it back to the people who own the company, their shareholders. They pay a nice, steady dividend. And get this, they just authorized a massive $200 million share buyback program. That's basically the company saying, we think our own stock is the best investment out there.
So, why does Wall Street care about all this? Why is this story so interesting to investors? Well, it's because DPM has put together an incredibly strong case from 2 different angles. The long-term story of the company itself and the shorter-term picture of how the stock is actually trading.
This quote from an analyst just nails it. They are organically funding their growth. What does that mean? It means they're not taking on risky loans or selling more shares to raise money. They are a self-funding growth machine. And let me tell you, in the mining world where everything costs a fortune, that is the absolute holy grail.
And that's why the market is so excited. You have this dual appeal. For the fundamental, long-term investors, you've got the financial fortress. Massive cash, no debt, and they're growing from within. But then for the traders who look at charts and performance, the technical side is just as strong. The stock has been doing really well, and you've got a lot of big institutional investors holding it, which provides some stability. It's a compelling story no matter how you look at it.
Which really leaves us with one final big question. By figuring out how to bridge that production gap, by funding their own massive growth, and by rewarding their shareholders all at the same time, has DPM Metals basically just written a brand new playbook for how a mining company can not only survive that brutal boom and bust cycle, but actually master it?